Time to take your wealth to the next level. Welcome to Learn Wealthy, your go-to channel for real estate insights, market charts, and golden opportunity. Let's build wealth together.
How's it going, everyone? This is James Santiago. Welcome for another Monday morning update here at Learn Wealthy. So let's go over the market. Let's break it down. We're here at, let's start with the CNBC website, Mainstream. So as you know, you've been hearing on the mainstream, there's no recession. Stock market's already coming back up. Look at this, S&P nearly back already from that when that SOMS rule was broken, when the carry trade that they said that caused the market crash recently, sometime around first week of August. So as we can see, S&P is already almost back from where it was before that happened. NASDAQ is also headed back already, and also Dow, it's going back up. So the market looks like it's coming back up, right, on the surface. But you know, if you've been watching this channel, our base case is there's going to be a recession. Let's see where we are on the bond market. The 2-year and 10-year treasury is still crashing, and the it's slightly inverted, about around 15 basis points, I would say. 2-year is 4.062, and 10-year is like 3.875. So as you know, if you've been watching this channel, the 2-year and 30-year has since around July 20th, and it stayed uninverted. The 2-year and 10-year is still inverted. It's still under this black line right here, but we've been getting close to being uninverted. And as you know, when that yield curve in the treasury uninverts, we are historically headed for a recession. These gray bars are the recession, and you see this. We have a period of inversion, uninversion, and then recession. Inversion, uninversion, and recession. Inversion, uninversion, recession, and so on and so forth, right? So we are still listening. We're not picking and choosing data. We're gathering everything to support our thesis. Let's check the Buffett indicator right now. Let's go back to long-term trends. As we know, I had a video explaining the Buffett indicator, that it's basically a ratio of the stock market versus the GDP of the economy of the US. So it's saying here that the stock market is still about 186 times the size of the U.S. economy. Well, technically, the stock market shouldn't even be equal the size of the economy, because the stock market is just the publicly traded companies. It doesn't consider all the moms and pops, all the regular daily unrecorded transaction you get from the average Janes and Joes, right? So a lot of people are saying that about 70% of if the Buffett indicator is around 70 to 80%, that would be a fair market value of the general value of the stock market. But as what, not my opinion, what the Buffett indicator is saying, the stock market is overvalued according to this. It's 1.86%, the size of the GDP of the US. We'll go, and what else are we doing? Gold has hit all-time high. So it's right now, the spot price of gold is $2,505, and just recently, around August 16, it broke that 2,500. It went past 2,500, and that's never happened in history before. So yeah, price of gold are going up. Gold and silver ratio though is still at around 80s, 86.14 right now. That means it takes about 86 ounces of silver to buy 1 ounce of gold. And you got to compare that, because comparing everything to the dollar, while dollar is inflating and disinflating and deflating, it's like comparing something to a moving target. So you also have to compare other goods against other goods to get a more clearer picture of things. It's like if dollar is always your measuring stick, it's like your measuring stick is always moving and you can't get that accurate data. So yeah, stock market is saying that it's booming again, coming back up, and all these talking heads in the mainstream financial media is saying stock market is great again, everything is great, nothing to see here, right? But also, you get all these news. Starbucks just changed the CEO. They got the CEO from Chipotle because their stock price has been dropping. So and then Chipotle stocks are falling too because they lost their CEO. But I wonder if that Starbucks price drop, if that previous CEO of Starbucks, is it really his fault or is it really the economy? And then Home Depot may need an interest rate cut to boost its sales, because it's been saying here, Home Depot expects sales to weaken as consumers grow more cautious. There's a lot of stuff. And as you know, what's been happening with McDonald's, I have an article here too. McDonald's sales fall globally for the first time in over 3 years. So if you look at the McDonald's stock price, it's been tanking, and that really doesn't happen that much in history. It's the first time that even the McDonald's is supposed to be the affordable option, and right now it's not doing what it's supposed to do, and that's why not a lot of people going there as much anymore. And as you know, Airbnb stocks have been tanking too. So that's a sign of that people are starting to prioritize groceries and necessities instead of travel and leisure. And that's what we have for the Monday morning update, like a general overview of what's happening right now. I believe the biggest news that will set everybody on panic, or more like put everybody back in check to reality, is when we get the unemployment again. So we'll see how that is in a couple of weeks from now. So make sure you stay tuned on this Learn Wealthy channel. And today I'm gonna make a video later on Kamala Harris's. I've been waiting for her, because Donald Trump's plan is like drill baby drill, put some tariffs on foreign trades, and basically increase production, right? And Kamala, tariffs won't do that much, but drill baby drill will. But Kamala Harris has her own plan now too, which I have been waiting for. So stay tuned. I'm going to make a video on that. See you in the next video.